Welcome back. I'm Pratap here. Today is the 27th March 2024. In this video, let us identify NIFTY support and resistance based on a supply-demand zone chain. This is going to be an extension video to the detailed analysis we did in our yesterday's video. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos are available at our NeoStock YouTube channel. I kept all the videos in a playlist, supply demand zone price action course. Even I have provided the link to this playlist in this YouTube video description. So please click that link, you will get into this page and then scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training videos are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. Even I have provided the link to our Telegram channel in this YouTube video description. Please join in the channel. It will be helpful to you. Each time when we release a new YouTube video, we'll provide an update in the channel. Now let's get into the Nifty 50 analysis. It is going to be a very short video. Look into yesterday's price action. There is a very small narrow movement. We haven't seen a much movement. You might be thinking this was the range we identified yesterday for yesterday's trade. You might be thinking the same range might be applicable even today. But please remember, the ranges may change based on yesterday's price action. We need to check if there are any high liquidity zones are created in our yesterday's trading session. So there is one high liquidity zone is created on 5 minutes time frame. Except that there are not much changes. Look into the most recent supply zone, the 9th one. See, yesterday it's created during yesterday 26th of March 2024 at 1410 candle, a leg in. After that you have 4 base candles. So this is a high liquidity supply zone and it is already gave one test yesterday. So let's draw this high liquidity 5 minute supply zone. So we are in the 5 minutes time frame. At which candle? 1410. After that 4 base candles. Yeah, this is 1410. So this is the leg in. You have 1, 2, 3 base candles. This is not a valid leg out. That's why software considered this is also part of the base. So the next one is a leg out. This is a medium size candle. That is how software considered based on the yesterday's price movement. So this is the way we can draw a supply zone. This is a 5 minute supply zone. Let me add the text. This is 5 minutes high liquidity supply zone. We have drawn based on type 2 proximal entry. If you drop to type 1 proximal entry, this already tested. It gave a test yesterday. And see the huge rejection. That means there is a strong order flow in this area. So today I am drawing up to type 2 proximal entry. Because of this, the ranges might change now. Probably during our initial trading session, the possible range, because we are always identifying the ranges based on high liquidity zones. This could be one possible range. Okay. If this 5 minute supply zone is violated, then probably this is the range, whatever we have seen yesterday, the same range is applicable. Now we need to check whether price will be moving within this range or one of these zones, either this 5 minutes high liquidity supply zone or this 5 minutes inside again we have 25 minutes high liquidity supply zone. If these ranges will be violated, we need to check in today's trading session. In case if this 5 minutes high liquidity supply zone is strong, probably prices will be moving from here to this demand zone. And remaining analysis holds good as per whatever we discussed previously. And there are no new high liquidity demand zones are created, only high liquidity supply zone is created. So that is the reason why the same 5 minutes high liquidity demand zone we discussed in our previous video, that still holds good. So this is the new range for today's trading session, and if one of these high liquidity zones are violated, the ranges will be varied. Let us assume if this zone is violated, this zone, then what could be the range? The range is going to be like this. Now one more range we have to draw. If it is violated, let us assume this zone is violated, this is becoming very strong, then probably we need to draw a zone like this, from here to here. If this is violated, this is the range. In case if this is violated, this is going to be the new range. This is what you should understand. But one point you need to understand, this is the place we get an opportunity. Suppose Nifty is opened with a strong gap up above, then automatically this 5 minutes high liquidity zone will be violated. Then we get a trading opportunity in this high liquidity zone. This is a 125 minutes high liquidity supply zone. So in this area we get a trade opportunity. If in case if Nifty opens with gap up, a strong gap up, then this 5 minutes high liquidity supply zone will be violated. Gap up above this zone, what I am talking about above this. It may open with a small gap up, get into this zone, and then prices again come down to the next demand zone. That possibility is also there. If that is the case, in this 5 minutes high liquidity supply zone, we get a trade opportunity. So this is the analysis of Nifty 50 for today's trading session. Hope this information will be useful to you for your further study and analysis. Let us all meet again in our next video. Thank you.